Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. All right. Nice snowy morning for those of us up here in the Northeast. Hope everybody is safe. Daily chart. So we've been talking about 3 days worth of support at the daily mid-band, the 20-day simple moving average, how a combination of the bear's inability to convert that line, the 9-day, the weekly pivot, all set up and opened up, moves back to 3,700, and then eventually moves back to new all-time highs. They pulled that off last night. So it's a new all-time high on the continuation chart as well as on the front month chart. The March contract, the all-time high on the March contract was 37.07. So hourly chart, you can see lots of opportunity at the daily mid. It held back on Friday. 9-day weekly pivot. We fought over it for a couple of days. Another decent look at the mid band here and here. Then it converts. We spend yesterday basically above it. We chop a little bit into FOMC. We get our new pre-FOMC price. It dips, it dips as low as 83 a couple of times during the course of the day. Once in the morning, once after the Fed. But then, they take it back up. It closes right around 91, 92. We ended up doing a few different things yesterday. We sat out most of the middle of the day. We ended up long, and we still are long against that pre-FOMC price. We've taken profits. We have a runner. We've got profit locked in on the runner, and we're just kind of sitting back, letting it work. The last few Globexes have been some really nice setups. Basically, the day's over before the day starts, and that's always a good feeling, especially in December when everybody's so busy. So heading into today, a couple things. You've got volume-weighted average price, VWAP 37.08. Proprietary moving average is 37.13. You see the hourly mid-band there at basically 37.03. That might get a look. Then you've got the roundy. So what the bulls need to do is to defend these little pullbacks as much as they can. And what it sets up is with a couple more higher highs, you're starting to look at areas like 37.50. Now, before you get all taken aback by the number 37.50 coming out of my mouth, look, we're not parabolic. Let's go back to daily chart. And we have to have this discussion every couple of months while they're jamming new highs in everybody's face all the time. This is not parabolic. That was vaccine day, okay? Comes up, touches the third standard deviation band, comes in, settles down for 4 sessions. Comes up, pulls back a little bit, and then you've got the steady climb, right? Everybody hates that part. That comes right back into where? The 20-day, the mid-band, right where it's supposed to, the mean that it is supposed to revert to. And it hangs out there for 3 days. Gives those bozos every opportunity to convert it and turn it into a sell rallies market instead of a buy dips market. Now what's happening? Well, unless the bears do something about it, and I think they're going to need news to pull it off, you've got another leg to the upside that's coming. Why? Because that's what this thing does. It just is. It just is. Look, the bear case is always more logical. It always makes a hell of a lot more sense. You sound a heck of a lot smarter spouting it off. Here's the problem. Price doesn't give a shit. Price doesn't care. It had a chance to care here and here and here and here, and it could have cared here, but it didn't care. And so we're up here. So look, you can be short, but understand that that's counter trend. Those are trades. Positional stuff, ultimately it's still a buy. Ultimately, it's still a buy. I can't really take the bears seriously until they convert at least 2 of these 4 lines on a closing basis and keep them converted for an entire session. If they do that, great. Let's go back. Let's go back here. That's a fantastic two-sided trader market. Be a great Christmas present for me in the room. But right now, you've got 3 to 4 sessions of the bears dropping the ball, tripping over blades of grass on the way to the end zone, and now they're going to pay. So, we'll see how it goes today. I'm really keeping an eye on this hourly mid-band as far as bull bear goes. Keep an eye on the news flow. There's still a lot of balls in the air. And I mean, the reality is there's still plenty of volatility. I said before this wasn't going to be your typical sleepy December. It hasn't been. It's had dead volatility moments in the middle of the day. And the key to dealing with this market is stepping out of those zones and just staying away. It's giving you 1 to 2 really good opportunities during the course of any particular day on the S&P Futures. You just have to, you got to be there for those. You have to take some shots and some paper cuts in the chop to try to be there. But when the move hits, they're really nice. So everybody have a fantastic day. Be safe, be healthy, take care, trade them well, fire up the snowblowers, and I will catch everybody tomorrow. Have a good one. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.